Good morning, ladies and gentlemen, and welcome to the Financial Juice live morning briefing with your host, Tony. So let's start off with the first headline for the day, an article from CNBC, as we can see here. Oil mixed as shrinking China economy overshadows Trump plan to ease US coronavirus lockdown. So from this article here, so we got some really negative figures coming out from China's GDP and also their retail sales as well. But before we have a look at those figures, let's just go through this article here. So China's economy shrank for the first time since at least 1992 in the first quarter, as coronavirus outbreak paralyzed production and spending, punched a huge hole in global demand for refined products. Also, it says in this article that the OPEC lowered its forecast for 2020 global oil demand and warned it may not be the last revision downward. So as we're looking from this article here, now let's have a look at the charts as well. Let's have a look at WTI crude oil, where we sit on a daily chart, just to give us a big overview so far of what we have. So this is where we sit at the moment. So we're trading below $20, as we can see here on this little image put down. Our 2001 lows is where we're very, very likely going to surpass, looking at the way that the chart has been printed itself. If I put it on a weekly chart again, let's have a look here. So again, very, very close to our 2001 lows here on WTI crude oil. Now, again, one of the other reasons, other than the China's GDP having an effect on oil, it's also OPEC that we had discussions yesterday and also during the week from IEA's head Birol, saying that the oil cuts that the OPEC and OPEC plus nations, non-OPEC, is not going to be enough. So you can see this continuation of hammering of WTI crude oil, particularly for US oil, being hit hard, continuing to be hit hard by this. Now, going back to the article, what it also mentions here is that on Brent crude oil, though, it was up by 55 cents or 2% at $28.37 a barrel, and that was around this morning UK time at 4 a.m. Whilst the US's crude for May delivery, which expires on April 21st, was down 13 cents. And this is at that time of when this article had come out. So again, as the US is looking to reopen on May the 1st, and guidelines have been put out by Trump on how governors can reopen their states from his press conference yesterday, which again, governors have control of how they reopen up the economy, and Trump gave this false sense of hope or power that he has over these different states, saying that he has the power to basically force these states to reopen. But as I said, it's down to the governors to make that decision. But Trump said yesterday that if governors want to reopen their economies, that they should make that decision quickly, which is going to put some pressure on these governors to reopen their economies. Now, for that reaction, if we're talking about how that's going to affect the US's economy, trying to reopen the economy very quickly, let's compare ourselves to China's GDP. Now, China's GDP, if I just bring up that data here of what we've seen so far from that economic release. So from China's GDP year over year, their forecast was minus 6.5%, and the previous was 6%. The actual came out at minus 6.8%. Now, China's just beginning to come out of their lockdown or quarantine phase, as you could call it, and they're still showing negative data from March's data. You would expect data to be low for China as well, coming out for April's data. You're not going to see huge jump back to pre-coronavirus crisis figures for China's GDP, but you're going to see an improvement. Now, for the US, we haven't seen our GDP figures yet coming out for the US. So if China is slowly starting to recover and it's already having an effect on their GDP, and is going to have an effect on their GDP for the foreseeable future, for the US, based off of facts of what we can see from China, you should expect the same sort of trajectory for the US's GDP and economy as a whole. Now, if we have a look at the charts, just to give us an idea of where we sit on the dollar. So if I bring up the Dixie before we look at the USD JPY. So on the Dixie, what we can see is we can see a resurgence in the dollar. One of the reasons being is that, one, markets are not so sure about May the 1st reopening of the US's economy. That seems quite, from here, this is why we can see a move towards the dollar in regards to safe haven assets. But if we not only do we take into consideration that the dollar is safe haven asset and people are moving their money towards the US, but if we look at US futures as well, we can see that there's this continuation of resurgence. And from what we can see so far is we did open up here on US futures. So just about over a percentage, over a whole percent is what we've opened up on US futures. So one of the reasons for the US futures continuing to move towards the upside, one is the talk of Trump looking to reopen the economy on May the 1st and keeping production up and running. And two, it's because of the coronavirus cases seeing a decrease in numbers, or we've reached our peak over in Europe and we're seeing a decline in coronavirus cases. So that's where we can see that continuation of optimism. Just to give a bit of more background, this is why we can see previous actions being taken. So we've had the coronavirus pandemic, so we saw US futures decline significantly as the risk-off sentiment came into the market and people moved their money towards the dollar. And then as we can see the Fed taking action, Congress taking action, there's a move back to more of a risk-on environment here. Again, we have reached a level of resistance at the moment. So what we've put down here at 2,881, we are just playing around here, but what we're potentially looking at for the day is where we see this continuation of movement in US futures, more so back towards the upside, going through these levels of resistance here and here. And then this level of resistance here is going to be quite a key test for US futures. So just keep that in the back of your mind. That's the current situation or the current place that we sit on US futures at the moment. So just to make that as a warning. Now, next article, let's have a look at the next one. So from Gilead Sciences, ticker GILD. Their remdesivir looks promising in leaked results, but don't jump to conclusions. That's according to an analyst. So researchers at the University of Chicago Medical Center, which is treating patients with severe COVID-19 symptoms, have seen remdesivir swiftly tamp down both fever and respiratory symptoms, according to a report from Gilead's share from the state. Gilead's shares leaped more than 15% in after hours trading following the report. Now, here's the thing: from these scientific research that is going on, they're not in a controlled test environment. So from here it says the best news is that most of our patients have already been discharged, which is great, and we've only had 2 patients perish. She made so from the Chicago University, Mullane made the comments this week during a video discussion about the trial results with other University of Chicago faculty members. And from what we understand here is that because it's not in a controlled test environment where you have people who are not on the drug, the facts are if you're just trying to recover from coronavirus normally, it takes about 2 weeks or 2 to 3 weeks to recover. Now, this is something that they haven't done, which is not really, as it says here. So the study has no control arm, with all of the patients receiving daily infusions of remdesivir. Again, if there's no control, how do you actually test the effectiveness of this drug? It's positive news. Hopefully we can see, we can get some more controlled tests being done to actually see a potential of a true vaccine being created. But you've got to remember that remdesivir, being a malaria drug, has no proven use. So again, this is something for people mentally, if you're thinking about keeping up spirits, it's a positive thing, but market-wise, you're not going to see that sort of reaction or that true reaction of a vaccine being created or effectively working. Only until we get a vaccine that actually works and that has an effect, then we're going to see more positive reactions in not only US futures, but also we're going to see a movement away from those safe haven assets. And also think about WTI crude oil. As the demand, as the vaccine is spread and there are less people contracting the virus, and it's you're seeing a resurgence in economies opening up and GDP figures coming out much higher, you'd also expect the demand for oil to pick up as well. So again, as I said, we're definitely going to reach our 2001 lows from here, but look out for a resurgence as we do see more of a, if we do actually get a vaccine, which the FDA said will take 12 to 18 months. If we can get something before that, then again, see a slow movement back towards, or a U-shaped movement in WTI futures or WTI crude oil back towards the upside, and we'll see that demand pick up again. Now, talking about drugs and vaccines, if we take a look at another article here. So here we go. So from Bloomberg article, the virus vaccine may be ready for mass production by autumn. That's according to an Oxford professor saying this. So now what they're doing is they're actually doing these coronavirus vaccine trials in a controlled environment, which is what you're looking for if you're looking for a reaction from a vaccine being created. This is what you're looking for. So what they're saying here is that adults aged between 18 to 55 years old are being recruited initially in the early and mild stage randomized control trial. It'll be later extended to older people before an expected phase 3 expansion involving 5,000 volunteers, according to Gilbert, who's heading the research. They say that the best case scenario is that by autumn 2020, we have an efficacy result, which measures how effective a drug or test is. We have an efficacy result from phase 3 and the ability to manufacture large amounts of the vaccine. But these best case timeframes are highly ambitious and subject to change. So what the US is doing is just pumping a vaccine, factually, a vaccine that doesn't, or remdesivir that doesn't have an effect, according to top NIH official Dr. Fauci and also the WHO. That is what the US is doing and pumping a load of money into that drug. This is a sort of action you want to see from the US, is where they're doing controlled tests, moving away from a drug such as remdesivir that doesn't have any proven effects as proven by fact, and looking to run other trials. Now, in total, for the World Health Organization counts 70 vaccine candidates in development, with 3 others being tested in humans, and one of them being from the UK, and also the other one in the US as well. So again, market reaction, we're not seeing too much market reaction as of yet from that. If we take a look at the cable here on the cable, again, markets, we did see, if we just take a look, so from yesterday, we go back, here we go. Okay, so from yesterday's, what we can see here, so from the market open in the US at around 8 a.m., we did see some choppy movement. We're trading in a range. This is on an intraday chart. We're trading in this range here at the moment. So it is a little bit choppy at the moment. So we can see our highs, if we just bring that up here. So we can see our highs of where we got to during the day at 1.25, and then our lows of the day at 1.24. So expect to see more of this reaction here from not only cable, but also from other currencies as well, as we see some, as I said, just some movement, just markets waiting for some sort of positive news, not only about OPEC, but also about a vaccine and the number of coronavirus cases declining, with countries taking effective and correct action to curtail the coronavirus disease itself. Now, in the UK, as we mentioned yesterday on the Squawk, that we are going to be extended in a lockdown till May the 7th. So expect British figures when they do come out for GDP, retail sales, and consumer sentiment, and also jobless claims and so on, jobs being created, that to be quite negative for the foreseeable future. Okay, other article that I wanted to go through as well with you guys is talking about, so cars in the EU. Let's bring that up here. So European new car sales plunged by 51.8% in March due to coronavirus, and that's according to the ACA. So in March, new car registrations dropped by 51.8% to 853,077 vehicles in the European Union, Britain, and the European Free Trade Association countries. And this is according to statistics from the European Auto Industry Association. This is as expected. Production is going to fall off in manufacturing plants. But the key thing is what the European Union is trying to do is protect those companies being taken over by any other foreign interests. And that will protect these companies that are in dire situations, or in where they're not producing enough cars or manufacturing as much, and their revenue falls off to the point where they're having to furlough workers or fire workers outright. And this is going to have an effect. So if we talk about certain stocks as well, so BMW, ticker BMW, the sales of cars made by BMW, which was among the few automakers reporting an increase in European sales in the previous months, dropped by 39.7%, while demand for the rival Daimler decreased by 40.6%. So expect other European car manufacturers to see a negative hit on their figures, as this is going to, until we actually get some, first of all, until countries within Europe start to relax their coronavirus lockdown or quarantine rules that they've set within Europe. Okay, now, as I said, it's expected to happen, and we're going to continue to see this for the foreseeable future. So one last thing that I wanted to go through is the final article here. So, Trump unveils plan to reopen states in phases. Now, what he says here is that Trump told reporters that healthy citizens would be able to return to work as conditions allow. He said Americans would continue to be called upon to maintain social distancing measures and to stay at home if they're unwell. Now, what are the three phases that Trump has brought out? Now, here they are. So phase one includes much of the current lockdown measures, such as avoiding non-essential travel and not gathering in groups, but large venues such as restaurants, places of worship, and sports venues can operate under strict physical distancing protocols. If there is no evidence of a resurgence of the coronavirus, phase two allows non-essential travel to resume. The guidance says schools can reopen and bars can operate with diminished standard room occupancy. And then finally, under phase three, states which are still seeing a downward trend of symptoms and cases can allow public interactions with physical distancing and unrestricted staffing of work sites. Visits to care homes and hospitals can resume, and bars can increase their standing room capacity. Now, it seems clever in the way that it's being done by the US here, and for the governors. And now what we can see, as now comparing it to the China's way of quarantining everyone for a couple of months, that seems really, really draconic. But here, the US is taking a gamble, a risk, a risk that could pay off in the short term. But again, as I said, it's a risk. It hasn't been implemented yet, and it's down to governors, as I said at the beginning, going along with this idea. You've got to remember, Trump said previously before this month that the country can't run whilst under lockdown, and it's going to have an effect. And as you can see, that has had an effect on US futures, and also the dollar being taken up as a safe haven as well. So again, do be careful for any sort of reactions where we see some more dollar strengthening. If we see that this three-phase scenario doesn't work out, and we see the dollar pick up in strength as a safe haven asset, again, to protect money and to get some sort of money from those government-backed securities as well. So if we take a look at treasuries as well, see where they sit. So if we look at the US 10-year government bond, the yield, so that's continuing to move towards the downside as well, as there are more people chucking their money into safe haven assets and trying to get some sort of profit in this current risk-off environment that we still see. We're seeing less of that, so as we had seen compared to back at the beginning of around mid-March, but there is still that risk-off attitude here. If we're comparing other asset classes, not only US futures and the dollar, but also, as I said, US securities as well, or the fixed income market. So that's where we currently sit. So again, I would, just from what we can see here from the charts, if I brought it up on a higher time frame chart, this is what we can see. So we see a strong amount of buying of US securities, or on the US 10-year and these bonds. So in regards to a movement back towards the upside where yields start to increase again, that again, from what I can see here, is going to take quite a long time. So we currently sit at the moment, so if we're on the daily chart, this is just on bond yields, by the way. So the lower the bond, the higher the price is for bonds, as more people buy up bonds. So as we can see here, we've got a level of support here at the moment on US 10-year bond yields at around 0.4 at 548, and then a huge level of resistance, or huge gap between our level of resistance here at 1.993 on US government bond 10-year yield. So again, we've got quite a long way before we start to see a movement back towards the upside in US 10-year bond yields. So that's going to take quite a long time. Now, it also depends on this phase 3 being effective. If it is effective, then we'll see that positive reaction from US 10-year bond yields moving back towards the upside in more of a U-shaped recovery. But if it's not so effective, then do expect, for bringing it up on a weekly chart, then do keep in mind that we can continue to hammer down and move towards the downside on US 10-year bond yields. Those are the two case scenarios that you've just got to keep in the back of your mind. So first case scenario, we're successful with the 3 phases in the US, and we see a resurgence in WTI crude oil, moving back towards the upside in US futures, the dollar not being too strong or not being taken up as a safe haven asset again, and also resurgence in US government 10-year yields as well. Okay, so other than that, the trading day for what we have release-wise, it's very, very, very quiet. Other than the continuing IMF meetings that we have, we're not really getting any market-moving news from the IMF. It's more just saying, oh, we've got to spend money here for the poor countries. Again, just a lot of repeated comments. So we'll keep you up to date with any sort of new comments that come out from the IMF, but we're not going to expect too much market or any sort of market-moving news from the IMF as of yet. Other than that, you've got the Canada foreign security purchases at 8:30 a.m. Eastern time, and then US CB leading index change month over month at 10, and then finally US Baker Hughes total oil rig count at 1 o'clock. And after that, it's just a nice and quiet day. Okay, thank you very much for listening to the Financial Juice live morning briefing with your host Tony. Do remember to like, share, and subscribe to the channel, and keep up to date with what's going on in the world. Thank you very much. Enjoy your day, and also enjoy your weekend. Thank you.